Well, folks, it's that time again. It's Federal Reserve week. So you're going to start seeing a lot of volatility in the markets and the stock markets and the bond markets and everything else. So let me give you some context of what's taking place this week. My name is Dan Frio. I do the rate update. I try to do it at least once or twice a week. I used to do it every day, but it got a little daunting, and I think you guys don't really need to know what's going on with mortgage rates on a day-to-day basis. So what I try to do is come out once a week and give you the economic calendar that's taking place, that we're seeing, and with that economic calendar, how that's going to play a role in what we're seeing in housing and interest rates. So the first thing we want to look at is the Federal Reserve's meeting this week, and here's where it is. Fed's words in focus as markets bet rate hikes will end soon. Well, we're going to know that tomorrow, because why? Let's go over to the economic calendar to see just why. So today we saw the consumer confidence number come in, and it came in lower than expected. I don't know about you guys, but my consumer confidence right now is pretty dismal at best. So I see the confidence levels and everybody starting to really come back down. But here's tomorrow's agenda. Look at this. I want you to put this into context. The Federal Reserve was actually created for two reasons. We call them two mandates. One was for price stability, which is AKA inflation, to keep inflation in line. And the next is jobs, a robust jobs market. They want employment at the maximum level. Well, what you've probably been seeing lately is the Federal Reserve says, we want to crush the markets. We want to crush housing. And the way to do that is we need the unemployment numbers to go up. Think of that, the unemployment rate to go up. They want less and less people working. Well, why? Okay, you might ask yourself a question, why? Well, the reason is there's too much spending going on right now. What's causing inflation is when you have too much money chasing too few goods. It drives up prices and it continues to drive them up and up and up. So the Federal Reserve's thinking, well, we have less people working. That means less money in the economy. People can't buy as much. So that should really stagnate prices and maybe start to bring them back down. So that's really the focuses of the Federal Reserve. So what you're seeing on your screen right now, tomorrow is a huge day. And that's why I wanted to post this video today, is because you're having a bunch of these numbers come out. Look at the numbers that you're seeing right here on your screen. The first one coming out tomorrow is ADP non-farm payroll numbers, okay? So that means how many people actually got a new job since the last reporting, okay? Well, ADP kind of doesn't do a very good job at this, but I do keep some of this in the context. But look at what they're showing here. The last reading of the number was 235,000. They're expecting that to drop all the way down to 178,000 people getting new jobs. They just started a new model 2 or 3 months ago. It's getting a little bit better, but I still don't take this really too serious just yet. I want maybe a couple years of these new numbers coming out so I can study and figure out what's going on there. The next thing is manufacturing numbers. We're not going to focus in on that right now because the Federal Reserve doesn't focus in on that specifically, but they're concentrated in on jobs and inflation. So let's go to the next thing is the JOLT index. What the JOLT index is how many job openings there are, okay? Openings. So if you see on your screen, there's over 10 million job openings. That means there's 2 job openings for every person looking for a job. Now you might say, well, the jobs are no good or the pay isn't there or whatever, but there's still 10 million open jobs. And on my way to work every day, I go through a couple manufacturing sections, and every one of those places has help wanted signs, hiring will give you bonuses and all this other stuff. So people are really in need of hiring. But now you get to the nitty gritty. You start seeing FOMC statements, federal interest rate decision, and all the other stuff. This is when the Federal Reserve, they're going to come out tomorrow and tell us exactly what they've done and why they're doing it. So the expectations right now are basically this. Let's go over to the next caption. Fed's words in focus as markets bet rate hikes will end soon or soon end. So the expectations for tomorrow is the Federal Reserve is going to raise rates by 0.25%, maybe up to 50 basis points, so 0.5%. Not which way they're going to go there, but I expect this to be maybe one and done, or maybe one more rate increase after this, and then they should be done. Because we're starting to see a lot of the inflation numbers really coming back down to where they want them to be. So I think the Fed rate increases are going to be a thing of the past here in the next month or 2 to 3 months. So that's that part of it. One article I did want to share with you guys is the CaseShiller index. This article just came out. It says the National House Prices Index continued to decline. So right now, since November of 2021 to November of 2022, home prices were up 7.7%. You see here that it says continue to decline. Well, they were up about 18% year over year, and they've dropped all the way down to 7.7%. So they are kind of coming back down. But you're going to find some interesting information in this article. There's finding studies where there's part of the east corridor of the country, it's really seeing any price decline. They're actually seeing prices continue to rise. So don't shoot the messenger, guys. Do your research. Check out this article and other articles I'm going to have down below. Well, that being said, let's figure out what in the world is going on with mortgage rates. So to do that, remember I said we don't focus in on the Federal Reserve or anything else. We focus in on this number right here. What you're seeing on your screen is the mortgage-backed security bond. It's trading on Wall Street. Here it is. You're going to see it live. You're going to start seeing it moving around. This is the price of a mortgage-backed security bond. All you need to know is as the price goes up, rates come down. There's an inverse or a flip-flop relationship between the two. But we love when this number goes up. Look at last year. We can go all the way through here. If you look at this chart, all the way through, down through here, all the way through to December, it's been down. What happens when this comes down? Rates go up. So all the way through November, we saw rates go up and up and up and up. We were at 3% last year. We're at 6% now. So that tells you that they're going up. But look at recently. Did we flatline? Are we going up a little bit? That means rates are coming down. If you look at this chart right here, these are where mortgage rates are today based on Mortgage News Daily. They publish this every day. And if you want this, you want to subscribe to this one, it's down in the link below. If you want to subscribe to my newsletter, it's down below as well. And you'll get this plus a ton of other information. We don't sell your data, so you don't have to worry about getting a bunch of spam emails. You'll just get this on a daily basis or a weekly basis, however you set up your account. But you can see right here, the 30-year fixed rate about middle of November hit its peak, 7.375. Where are we now? 6.25. So we're 1% lower, 1.125% lower than where we were just 60 days ago. So if you bought a house and you want to say, hey, can I save money on my payment by getting a lower rate? You can. Check us out and give us a call. We'd love to help you. But if you're in the market to buy your first house, what we'd like you to do is visit us at therateupdate.com. So we are a national lender. We actually are a huge broker as well. We're set up with over 85 of the country's largest banks and credit unions and mortgage companies and everything else. Most of the companies we deal with, you'll know. So what we can do is we can offer our programs and our rates, as well as all of those banks, finance companies, mortgage companies. We can offer all of their programs and their rates as well. So we do all your shopping for you to make sure you're in the right program. You've got the lowest rate and the lowest cost structure in the entire market. If you've already closed and you want to check and see, can you do any better on the rate that you got when you closed? Upload your loan estimate, your closing disclosure right here. We'll do an analysis for you real quick, send it back to you and let you know how much money you can save. So that is it for today. If you enjoy my videos and you find educational value in those, all I ask you to do is do me 3 things. Give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. God bless, guys. Thanks so much for watching. See you tomorrow. Bye-bye.